Nick, how you doing?
I'm doing great. How about you guys?
We're
Not
doing
too bad.
okay. We're doing all right. Just talking about this intraday volatility here, Nick. Is it got you scared at all, or are you just using these dips as buying opportunities?
It is pretty scary. Anybody that's not scared by headlines that whipsaw markets like that is fearless and doesn't belong in the. You're just gambling. You have to be scared. How can you not be? But sometimes you can see it coming a little bit. Like yesterday's pop was more of, I sometimes say that bullish is just one letter away from you know what else, right? Bull something else. So yesterday I got sent to KP duty by Fari because I tweeted him that. And he he didn't like that. So anyway, so sometimes you see it coming. Today I'm a little more comfortable with futures being up a little bit as opposed to yesterday's. But the good news on yesterday is that we salvaged the day, whether because of Apple stuck in there or other things. But boy, I mean, yeah, did you see Priceline yesterday touch almost
Yeah,
1100?
yeah, we did. We did touch on that. Almost got to those February lows. So, how do you approach it? I mean, did you try and catch a falling knife yesterday? And some, I know
I
you like to play the momos. They
I
gave you,
did, and
yeah.
I got scared. I did in Google, and I got scared, and it cost me a couple grand. So I bailed out and I did the right thing at the wrong time. So, but live to fight another day. So yes, I did try, and then I said, you know what? What the hell am I doing? I'm just gonna back out and wait to see what happens, and I'll trade afterwards. And that's what I did. I had a good day because mentally I was out of it just watching because we're gonna lose fingers. Here's the thing with the momos. That's what was really scary. I mean, the depth that they went to some it's a gut check for a lot of these momos, and some of them I think are gonna this drop is forcing them to go through a change of mindset for all the traders, and some of them are actually going in fundamental changes like Netflix. I used to say that the world was giving it a pass like Amazon as to okay, global growth is driving the price up, but now it's going to have to go through some major
Oh,
changes like today the deal with Verizon they're paying the cost is undisclosed for faster delivery. So how is that going to change your model? So right now Netflix is in the penalty box for me because I don't know how we're going to trade it going forward. It's got some major things going on in its stream. It's like Google saying, "Oh, suddenly their traffic is going to be exposed to some new element or price
oh,
hike or something."
so going in fundamentals. Okay, before we move on to some issues that potential plays for today, Dennis and I were talking about Apple and how it kind of got capped on Friday, but we were possible theory. People that had all those weekly options were just selling stock against the options. They're gone on Monday. A lot of time you see that resistance cleared up just saved the market yesterday. Do you have some long term positions on an Apple you're still holding on to, or did you try
I
and reload after the earnings?
I cashed in my long position just after the earnings. I broke one of my rules and I sold credit spreads, but for July and at 450 in one of my IRA accounts, and it was a long-term play. I sold them at 99 cents, I think, and I closed them at like 20 cents. So it closed them. It closed most of them just before the earnings, and then I left a little small position just after the earnings, and I haven't touched it since. Open interest tells me that 600 is going to be a good challenge for it. That we might try to poke through it just to stick it in somebody's eye, and then but it's all calls almost above 600 for this week. So, but people love splits, and they might be chasing that split, and I don't understand why. So I'm out of Apple for now. I will trade it in its new neighborhood when it splits.
You get seven more shares, though. Doesn't that mean you make 7 times more money there, Nick?
In this stupid market, it does because they'll split it and then chase it right back up. Yeah, yeah. So I'm sad about the split because now the big dollar stock goes down,
Yeah,
and
you like
with
the
it
big
go down
big
the
dollars.
premium. So
Right.
now the easy trades become a little trickier. Speaking of open interest, I don't know what to make of it. Maybe you guys know. Ooh, the future just took a little dip down. I was looking at the small cap RUT contract for this week, and I had to double check it. My platform is showing me that there are a couple of lines at 1020 and 1030 that have 40,000 puts each. That's like dwarfs everything. Everything else is like 1,000, and then you get 42,000 in two separate instances in the
What
puts.
were
I
the
don't
strike? What strikes there, Nick?
1020
A 1020, 1020.
on
And it,
RUT
yeah.
1020 and 1030. So check it out and let me know if you throughout the day if you guys can come up with a theory on that.
Okay. For some reason, I'm not getting the symbol on that. So, are you a Twitter player at all? I mean, you got the earnings coming up. They're throwing in the chat here that Kramer predicts more pain. New CEO paid millions last year. Terrible looking chart, hanging out above the lows, all time lows, the 38.80. Are you tempted to like do anything here, like a 43, 46 call spread or something like that, or you just
I'm
have no
I'm
faith?
I'm
No
tempted
faith.
to play a put play on it because I just can't see how what they're going to say that's going to excite everybody. The only savior is that if we continue green today with the upbeat momentum of yesterday, maybe the market will give it a pass. Whatever they say, they'll pop it on it. But I'm going to go with the flow. I'm going to look at the options and see where everybody's lined up, and I'm going to line up with the herd.
Oh, you going with the herd on this one? Okay.
I'm not. Yeah, I'll put my Dennis Gartman hat on. I'm not as smarter than the guy out there. I'll just take whatever the market tells me. So, it's. I don't fundamentally believe that the company is going to the moon. They have a lot of. I love using the product, but again, I don't see how they have to tell me how they're going to make money at it. And so far, it's a maybe. I don't know how they're going to make money on it. I need to know a little more about that.
Yeah, that's
Uh,
something that Jake's been saying, since the IPO, that they got the traffic, they got the users, but hey, show me something.
I think their problem is when they report, everybody doesn't like their user interface and interaction is because they really report it honestly as opposed to LinkedIn and Facebook. I mean,
Ooh.
they count every account as active account, especially LinkedIn. I mean, I know they spammed me for years before I even used them, and I bet you they counted me as a user since the beginning, and I wasn't up until like months ago. And even then, I rarely touch it, LinkedIn.
Yeah.
So that's not a really good user. I'm on Twitter all day.
Yeah.
yeah. Usually, I'm actually following. On Twitter, I'll be on there and just following all the people that I follow, and it's good at breaking the news too, because a lot of times Twitter will actually break it before a regular news feed sometimes, because the news feed has to obviously source it and make sure that the information's correct. Where you get a rumor on Twitter, they can just throw it out there right away. So
Right,
if you follow the
exactly.
right people, it's actually great for breaking the news. So
Yeah.
I like Twitter too, but again, I don't click on any ads on Twitter though, and when they pop in my stream, I kind of just ignore them. So it's still a matter of figuring out, I guess, how to monetize it.
Exactly.
And also, I mean, when you have the Twitter up, or I mean, I have it on my phone and stuff. I mean, it's not dynamic. It's like you got new tweets. And then you got to click on that, and you get the new tweets. And I'm just like, I'm too lazy. I mean, I just. You see it, stock twits. It's a little bit different. You have the stream, and you don't have to keep hitting updates. So if they could figure that out, maybe I'll buy the stock.
I prefer to hit update.
You
The
do.
the stock twits is a little too fast for my eyeballs. The update, at least I know I've got 10 I haven't read yet, then I know where to start reading.
Hmm.
With stock twits, you got to keep watching it, and it forces you to be stuck to it. Although I do like the stock twit fact that it's more real people as opposed to a lot of eggs following you on Twitter. So from an from investing, StockTwits is better that way with your own community. Yeah. But the Twitter thing is you can always set it to text message you, so I get them through text message
Right.
statically.
Right.
This
Right.
the straddle there, I'm just pricing it out to 40.5 for
Yeah,
this week.
Nick, give Dennis
But
some advice on this, please,
I gotta
Nick.
stop looking at these
Please.
straddles because I just sell them and I get killed.
I don't like selling the
$5.07.
straddles because I don't like selling the straddles unless you scientifically know what you're doing and you have some sort of a. I mean, it takes a lot of work to figure out the band as to
Yeah,
what's going to make you money, and then it just takes one to mess it all up. They're tough.
$5.70 is what they're pricing for volatility on this one. So $6 move. So you think
Well,
that sounds about right there, Nick? You think this thing's going to move $6 one way or the other?
I think it's going to move big one way or another. It's just I don't think we're going to have another HLF, which I bought puts on HLF. Maybe I can salvage some value out of them. Right now, it was looking a little better for me.
So, Nick, would you buy Strangle? You know, maybe like a 41. I mean, if you think it's going to move $6, I mean, Dennis, can you price out the 41 Strangle there or the 40 Strangle or not? I mean, like a 45 call in a 35 put or something like
This
that.
would be based on yesterday's pricing, obviously, because the options aren't open here yet. But yesterday, just give me a second here. I actually didn't have them up. You want the 45 call, Joel?
Go like yeah.
The 45 call for this week's $1.20.
Oh, jeez.
Yeah, I
Yeah.
know. It's just the
Yeah,
premium.
you see, but
So
with
much,
a gamble
man.
like this, I'd rather flip a coin and make a directional bet and buy something closer to the money that has a
Okay.
chance of
That's
working out.
yeah.
Because then I don't have to make two guesses. The first
Right.
guess is in which direction, and the second guess how far out.
Right.
Well, guess the direction and make the other one a sure thing. So why add another variable that could trip you up? Yes, you're going to pay a little extra for it, but if you want to participate, there's nothing free. Now, if you want to make it a complete lotto every once in a while, fine, step out for penny play. But if you want a chance at doubling your money, flip a coin and buy close to the money.
Where are the 38 puts at, Dennis? 38.
38s?
Yeah.
35s were 75 cents.
Oh,
The
jeez.
38s. Hang on, 38s.
No, it's gonna be like
this
$4.
week expiration.
$3-4. I bet. I'll go 327.
No, it won't be that much. But I'll tell you, it's going to be
Not under two-
$1.70. It's
Really?
$1.70. 38 puts. It's
So
still a lot of money though. $1.70. So it's got to go down to 36.30 there for you to break even on that. I don't know, man. That's a lot of money.
What about this
The-
LinkedIn chart there, Nick?
Yeah, well, it's one of the things I wanted to talk about today.
Okay, go ahead.
Yesterday, I posted a LinkedIn write-up, which was it's not too long ago we were talking about 300 or high twos, and now we're closer to 100. And if you zoom out to 2 years, and you can see really the impact of the level where we're at, it's just incredible. I mean, 125-ish is really where it was flatlined for the longest time. And then suddenly it leaped up. So now there's an open gap that starts somewhere around 140. So it's not that far from there. I'm not a believer in always hunting open gaps, but it's there.
It certainly is. Yeah, that gap that you're talking about, Nick, is from 126.24 to 140.13. So
And it's February of 2013. So but that level, if you believe that the company is not fake, I mean that should be a bottom, assuming that the market does not crash in general. Because if you look at it, it's spent a lot of time. It's in that area, 100 to 130-ish.
I remember
Yeah.
that. Yep.
So it's a well-consolidated level from which it leaped, whatever. So if somebody wants to take a shot with a credit put spread down there, if you can get premium long-term there and set it and forget it type of a trade somewhat, then that might be something to consider. But, which brings me to another thing I wanted to mention today. So now the major trade becomes a coin flip. What do I mean by that is, will we correct, will we not correct? And that's where you're going to set up all your trades. I talk macro. Well, now the macro has a coin flip element to it, as opposed to the fundamentals, because the fundamentals are still the same. But what's going on with the macro? Everybody wants this stupid correction, and if you build it, they will come. And if you anticipate it long enough, it may become a self-fulfilling prophecy. So will we correct? Won't we correct?
Well,
If we won't-
I was going to say we got some major macro news coming this week too. We got a 2-day Fed meeting starting today, and then
Yeah.
obviously Friday we got the jobs. So
Right. Well, in the Fed meeting, I don't think they're going to say anything different than they've been saying for the last year and a half. We're here for as long as you need us.
mhm.
Period. That's the message that's been with the Fed. We're not raising rates anytime soon. Now, if they decide to say they're going to raise rates, look out below, because the one day where she threw it out by mistake, we had a tizzy that
remember.
we still haven't recovered from that.
Okay.
Yeah, in the question and answer session, she wanted to crawl under the table. I think after she said that, the market
Oh
got
my
killed.
gosh, I can't believe she said that. She should have
It was an
retracted it.
oops.
She should have
Well,
retracted
I
it.
guess you don't want to retract stuff you're saying, but I think she's like, how did that come out of my mouth? Oops.
Yeah, really. That diarrhea of the mouth there. One thing, a couple more thing is the globally, the Ukraine issue is not going away. Like I've been saying that May is going to be a little volatile locally there because they have elections coming and they're going to struggle for power. Well, it came about a little closer than May because here we are looking at headlines. But I think the world needs to unite to deliver the stern message that Obama is trying to deliver. And so far, I haven't seen that. It's been sporadic, splintered, and it doesn't have an effect. Whereas if France, Germany, all these guys stand up and say, yes, we're behind Obama 100%, we're going to put this, we're going to do that, we're going to do this, maybe the message would be stern. So far, it's been, we're going to maybe do something about it. We're going to maybe do something. And no, it's not like yeah, we're saying it, but nobody else. Do you feel like anybody else is going to be standing tall and strong behind us? I don't feel that.
No,
So
not at all. I noticed yesterday too. They actually had someone on from the Guggenheim Foundation. They were talking about all that Michigas with the Clippers and whatnot. And he flat out. This was when the Spoos were traded like in 1847, 1848. And he said, "I definitely think that Russia is going to invade Ukraine."
yeah, I
And
heard that. I
yeah,
heard
and
that.
I'm like, wow, that's a pretty big statement. And the low was in for the day already in the Spoos. I believe it was 1844. And I saw a little blip down, and they dropped 2 points when he said that, and then it immediately came back. And at that point, I was like, oh boy, if that was a pretty bold statement. It didn't take it through the low, and then I think I got up and got a drink of water or something. I came back, and then it was off to the races. But using the
Yeah.
old CNBC thing, just going back to gaps real quick. I mean, if you've been a patient trader in Facebook here, it's filling a gap. It's filling, and I think it did in yesterday's session. So, boy, decent numbers, and they still whacked it. Yesterday's low was at 54.66. You gapped up from 54.95 to 60.46 here. So, you attempted it all on this Facebook, or is it just too strong of a downtrend?
Facebook bounced off of an important level ish. I'm
Mm-hmm.
looking at it, and it's defended that level a couple of times already. It broke
55.
through it just under that gap a little bit, but then it's bounced hard. So it almost says, okay, it bounced the same level. And it closed, it had a decent candle, although red, it rejected the low of the day. But now I'm looking at it, I'm not a technician, but I take the spirit of technicals, and it's head and shoulder ish. I always say that. You can argue for, they ran it up to 57 and a half back in, well, this is 2 year. Let me zoom in to see if it,
It did
okay,
fill
so
the gap from February for sure. At that 55 level, you had the high. This was on an earnings play too. 54.95 high gapped up that data 60.46, and then lo and
yeah,
behold, you filled that gap yesterday. But
right.
so,
I see that. So, but just before that, they tried to run it up and it ran against the roof. Boom, 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 boom. Then fell down and then gapped up, broke the roof, and then ran up to 70 ish and then fell, right? And then they tried to run it back up 62 and a half a couple of times, fail a couple of times more, and then failed again now back to a neckline of sorts to just under the gap. So now they've had three attempts, the middle of which was the strongest. That to me looks like a head and shoulder behavior. You run up, you fail, you run up higher, you fail, you run up, you fail worse than the second time. So are they tired
mhm.
or not? So now it's almost a coin flip. I'm not going to invest in a coin flip.
Okay, that's good. Just all right to close things out here. Just macro. Let's get macro on us,
Yeah.
Nick. Back up here against all-time highs. Have a couple highs from Friday and Monday session up here. 71, 75, 73, 75. You looking for that? You still selling into that resistance here until you see some kind of news, fundamental news, or we getting a
Yesterday, I
breakout?
was convicted selling the pop because it was a relief pop that nothing happened over the weekend.
Hmm.
Today, I'm more scared of the pop not because the data changed. The data is still the same. Anything above 1875 is resistance. 1880 is much stronger. 1875, 1885, 1890 on the SPX, that is a good strong band of resistance. I think the 1900 is still impenetrable with the data I'm looking at, but I'm not going to short it. Yesterday I was more convicted in shorting it. Today I'm not. Macro, I'm going to back up and revisit the relationship with the rates that we have. We've had this killer relationship, inverse relationship. We've got two on one side. We got the TLT and the yen on one side working against the markets, and the 10-year on the other side. So the first two rise, the second two fall, and it's been tick for tick. Now the TLT looks like it's, although still on the upper side of the channel in the last 180 days, it looks like it's stalling. And today's opening, it's looking like it's going to open down. Same with the yen. And the 10-year looks like it's plus 1%, plus 2% probably today. If we can maintain that, then we have a chance at keeping green. I don't want us to break the new highs. I want us to just build a base and stick it to the bears and say, hey, listen, you're going to scare us into selling to a certain point, but then we're going to hold our ground until you change the fundamentals on us. If you change the fundamental on us, then maybe we'll sell.
You know what I think is going to happen, Nick?
Right.
I think we're going to go up there. We're going to penetrate 1900 and then turn and kill everybody who covers. First, the bears will all be like, oh, 1900. Everybody on CNBC will start getting bullish, and I think that's when we'll rocket. I think there's just so much overhead resistance and so many people leaning on this whole 1875 to 1890 area that we got to go out there, take out all those shorts, make new highs, breakout becomes a fake out, and then we take it down. That's what I think is going to happen.
We can't close up there with this data, don't you think? I mean, we have so many.
I don't think it matters. I think there's just so many people leaning on this whole area because it's been like a dozen times we've been up here in this 1870s. We need to get those shorts out.
Yeah, I feel like slapping everybody that goes on CNBC and says, we need a 10% correction so we can buy. They said that, and when we dropped 10% in the Nasdaq, nobody bought anything.
Then they were saying we're going down 30.
Yeah, well, where the heck are these guys that say we need a 10%? Well, pretty ballsy of you to say we need an accident to find out what kind of drivers we are. You know, it's just crazy to ask for a correction just so you can buy in. Buy the stuff you believe in or short the stuff you don't believe in. Don't ask for the whole market to go down and ruin people's lives. That's just crazy talk.
Okay.
Words of wisdom from Nic Chahine.
Cleaning out the book. Words of wisdom. Nick, thank you for coming on again. Nick's product on MarketFi, creating income with option spreads that wouldn't be selling straddles, Dennis. So we will we'll end the segment now. Thanks, Nick. We'll talk to you next week.
Thank you, guys. Thank you.